Welcome to the Money Vikings Podcast, where we conquer financial freedom. Join Greg, Jerry, and Bob as they discuss everything investing and personal finance. The Money Vikings Podcast is hosted by three dads who are doing what they can each day to burn down debt and build wealth. Learn the path to true wealth. Their podcast and website, moneyvikings.com, is a treasure trove of ideas. So without further ado, here they are, the Money Vikings.
How to play the loser's game and win like a champion, and other great investing ideas on the Money Vikings podcast number 46. My fellow fathers and dads, Bob and Jerry, are you there?
Yes, we are.
You know, it's not even Father's Day, but it's a lot of work being a dad. It's a lot of work being a mom.
It is. I feel like the world is conspiring against me to go on a hike with my son. My car broke and just
nice.
The battery's dead. So yeah, I'm here. I would be hiking now, but I'm here.
Wow. Okay. Well, hey, we're talking about ways to make money and build wealth for everybody. So
I'll take it.
Let's do it today.
I'll take money. I'll take wealth.
It's a long, hard journey, guys. It's a long, hard journey.
It absolutely is.
For our audience out there, just a reminder, as you all know, this is not a financial advice. This is for infotainment and educational purposes only, and these are our opinions. But you can follow us as we build wealth, and that's what we're sharing on our show. So, hey guys, we do news first. So Bitcoin and ETH, Jerry.
Yeah.
It's pretty exciting. I mean, I was getting really depressed about the whole thing, which you're not supposed to do. If you get emotional or euphoric or whatever, then you probably shouldn't be trading it. But I sort of stopped looking at it for a while and just kind of went on to stocks and other stuff. And I'm pleasantly surprised to see it kind of coming back. I think Bob, you may have called it a few weeks ago, right?
Yeah, I think it was back in June, July-ish timeframe. I was charting it out, and just things are pointing out that it was going to be around this time. It was going to be late, mid to late July timeframe that it starts to waken back up. So you can watch the total crypto market. But I'm gonna play that Doge profit, man. I'm gonna play
Bob,
those.
Jerry, you're right. Bob did call this. Yeah. That was
He brought it up last week too.
I was whispering it.
You were whispering
it. Amazing. The Oracle of Southern California.
The show, but it was a few weeks ago. So yeah, I'm gonna, if I'm looking at it correctly, and if this thing is by chance spanning or playing out the way it did last time, Doge ran up about 800% in a matter of over a month period, essentially. Over 5 days, it went up 600%, did a pullback with a spike again, pullback, and then it did another run for like 300-something% in a matter of like 2 weeks.
Wow.
So
that is so cool.
Yeah.
Well, and then there's a lot of interesting stuff going on. I mean, I've been watching various congressional speeches because Congress is really getting engaged here on crypto regulations. I don't know if you guys have followed some of that, but in the infrastructure bill. So I'm making a few infrastructure plays with PAVE and Jacobs Engineering because I do think that's going to pass in some form, and I'd like to ride that wave a bit.
Didn't they put some sort of poison pill? Sorry, I didn't mean to cut you off. Is that where you're going?
That's okay. You're right. It's controversial, and I haven't dug to the bottom of it yet. But yeah, I was listening to the debates on the floor regarding it. But some of the stuff I've read is mixed. I mean, yeah, some are some will claim it's this is this can destroy the whole thing, and others are saying that a little bit of regulation like this isn't necessarily always a bad thing. I mean, if there's a way that they can encourage the ecosystem to grow and then have some kind of regulations that weed out bad actors, then I think, we might be in a place where this actually supports the system.
Right.
I don't know. I mean, I'm not an expert in this field, but that was kind of my 2 cents I could get out of it.
Cool.
Here's the thing is I'm trying to keep an eye on where the trades are being made and whatnot with the infrastructure bill, because, if things do pass with it, that amount of money is being funneled into the system. You're going to see a lot of tickers make some moves, a lot of them. So I'm just trying to see what's going on with that. But to the point of the cryptocurrency, there was even something mentioned about the digital dollar, like as a sort of the U.S. economy and the market.
Yeah, I think all this stuff, guys, helps it. I mean, frankly, I think all this like attention and trying to, create a system where you can get the efficiencies out of this new technology, and then try to see it for what it is. It isn't quite it's not an equity, right? It's almost like it's becoming an asset class of itself. I know you guys are the same way. I've finally kind of struck upon for my risk profile and for my portfolio, I've struck upon the right amount for me. It's only 5 million. It's only 5 million.
It's only 5 million. Yeah,
it's just 5 million. That's
your play money for the week, right?
Yeah. I'm just comfortable with that. No, but I mean, but I've found the amount that works for me, and I think you guys are doing the same thing, where you find that kind of like, okay, this is a lot of money, yeah, but if I lost it, I'm not gonna be so depressed about it. Right. But if it takes off, we'll see. I mean, it continues to take off, and it continues to build out. So that's exciting. Let's see. Anything else on that, guys? I got one other news thing I want to share with you.
Well, just on that, the only thing I want to say is I don't think that crypto is inherently evil and causes money laundering and evil things to happen. I know a lot of politicians like to say stuff like that, but I don't really think crypto is that. And I also think it's going to be very difficult for them to regulate. What I am concerned about is if I have certain brokerages that start to prevent the transfer of money from one entity to another, like Binance to HSBC, and those may not be the right ones, but there are banks that are starting to limit moving money back and forth. So you do want to make sure you have diversification of your crypto resources, off-chain, cold storage, or different brokerages. So if some of them get regulated like that, if you will, that you don't lose all of your crypto because you're in Binance, and now US doesn't like them.
Wow. Yeah, that is awesome. It's funny too. They don't talk as much about all the evil things that are done with dollars.
Exactly.
That's what makes me laugh about it.
We could speak all day long about, well, that's amazing because, Nazis used gold and earth sharks to destroy the planet.
But wait. It's gold, though. It's gold. Don't say anything about gold.
Right. But you know what I mean? It's like, okay, yeah. I mean, all these things we're talking about are mediums of exchange, and they're resources. And resources throughout human history have been used for good and ill. And everything in between, things that are, and then buying a cup of coffee, which is whatever. So
I agree with you, because I laughed when I heard that, because the statement of where, all the terrorist activity, it's being done because with cryptocurrency, and it's this black market out there. And I'm thinking to myself, like, isn't stuff paid for with like US dollars and gold all the time for terrorist activity? Like,
it's called money laundering.
Yeah, what are we talking about? Are you crazy?
And in many ways, Bitcoin is much less, it's less anonymous than dollars. If you use cash, that's completely untraceable. But if you use Bitcoin, I mean, they were able to find the pipeline hackers and get some of that money back. You're tracing back to the wallets, locations, IP addresses, all that stuff. So.
Well, it's on the blockchain. You can see it. I mean, it's ironic.
Yeah,
it is.
No, I mean, there are currencies that try to be more private, like Monero and things like that, and that's their thing. But it definitely is more trackable than cash, for sure.
Yeah.
So this is something that might hit close to home, guys. This is also something I saw in the news that kind of tickled me, and this is the kind of stuff that's going to be. We're going to talk about all these things in our newsletter and in our future premium section of Money Vikings. But, this is just a reminder. We live in this culture of like hyper like consumerism in terms of like fancy, like making our homes really fancy, which is great. I am all for, like, I love real estate. I'm all about beautiful properties and taking care of properties. I think it's a wonderful thing. But I read this quote from somebody that was kind of, a backlash to that. And they said, home and garden TV isn't real life. There's no such thing as the perfect house, right? Indeed, you likely can't get what they're talking about is people that are buying homes right now that might be first-time home buyers. And there's this sense of like, I need to get every perfect thing in my house. And I'm just like, it doesn't exist, guys, for most of it. I mean, hey, listen, I understand if you're a deca buy whatever house you want. It's going to be perfect. But if you're a normal person, like most of us, like 95% of us, you're likely, you're not going to get every single thing you dreamed of. So, linoleum countertops shouldn't be a deal breaker, especially if the home you're considering is well priced and inventory is low. You really have to look at the big picture when buying a home. Items like cabinets, fixtures, bathroom flooring, landscaping can all be spruced up, explains this person's name is Friedman. This is a successful realtor. If the house is in good condition and there are no structural safety issues, then you really have to decide what will make or break your ability to buy. So you guys know we do a lot of discussion and analysis of real estate on our blog, and there's more to come in our premium for future real estate investors or for current real estate investors. But, I'm telling you, don't ever forget about the power of a coat of paint. Okay. That's all I got to tell you.
Right. Absolutely. I think I've said this last time. This is what I'm excited about when we start getting this out on the premium, the Money Vikings premium side is when I start doing the videos and tutorials and we do the information about real estate is, because there's a lot of people out there that have made money over this past year that, I want to drive home the point to make sure they understand is, that wealth can actually become generational wealth when you start bringing it into the real estate market and start expanding into properties and rentals and, different things of that nature, and doing simple things to increase the value of a property. And one of those things is just simply paint,
Yeah.
Because they don't understand. People go into a house and
they don't like the color.
It's insane. It blows me away.
I'm not buying this house. I don't like the color. It's
right.
Like, you guys, Sherwin-Williams, great stock, by the way. Awesome dividend stock.
Right.
Sherwin-Williams, cover the world. Okay. It's got the most awesome logo of just like a paint bucket pounding the world with paint. I love it.
It's little. But the thing is, it's surprising the statistic of how many people won't buy a home just simply from the fact of a paint color.
Yeah. When
paint is paint and very simple to handle and manage. And if you can't do it yourself, it's very inexpensive to hire somebody to do it for the money you get out of it.
And I know I mentioned this, Bob. You and I are in the future on our premium. We're going to do tutorials on house projects because people may not know Bob is known as Bob the Builder. The guy can fix and build anything. So that's going to be an awesome part of our premium.
I'm very excited.
All right, guys, the Munger Down Under.
Yes,
you guys got to watch this. I saw an incredible biography clip on YouTube on Charlie Munger. Please, audience, just check it out. It's so awesome.
And you see a young spiffy lad,
dude, young spiffy monkey pants. I mean,
good looking.
The guy is like a lady killer. The guy
handsome
is like,
guy.
Oh my God, the guy is like so awesome. So anyway, he's like anybody. I'm sorry, it's probably because of our grandfather, but like Bobby and I and all of us, I know you too, Jerry. I love these old school dudes. I love these old school guys. I love them. Because I revere them. I think they're wonderful. Like they're just like such cool guys. And when you dig into their lives, they went through some shit. A lot of them went through some very challenging times. And we don't do a depressing show, but he had kids at a young age, and he lost a son. This is in the 60s, so you got to keep this in mind. But he lost a son to leukemia. Okay, and that changed him. Okay, that changed his outlook on life and all kinds of things. But the thing about him is he had this belief that, you cannot feel sorry for yourself. We're humans,
right.
And we have got to push forward. And he just had this thing where he had this spirit about him of, you fight on, you push on. And I found it very inspirational. Go ahead. Yeah.
I would say the thing is also with it, I would say this is that I know we're, we talk about how we're this is a different era of investing, and especially the retail investors that came in this past year. It's definitely changed the dynamic of investing, and I think it's going to permanently change how we handle the future. However, I will say the seasoned old school style of investing and those investors like Buffett, and they have these words of wisdom that seem to just pretty much tell people is stop being a pansy. And they throw, kind of throwing water in your face, like chill out, right?
Chill out.
You don't need to do this, like make this trade in one day. If you're not a day trader, don't try to trade like a day trader, because Wall Street bets does not happen for everybody. It is not a reality for everybody, and it's scary that people think it is, because people, and I will tell you, a lot of them are hedge funds and brokerages that are egging people along with their posts of their YOLO calls that paid them $100,000 off of $35.
It's all this social media stuff.
Right.
Get rich
It's
quick.
fake.
Hey, listen, try some of it, but also in my mind, have part of your psyche that's an investor, a real investor.
Right.
Okay. And in addition to that, C's candies are awesome. Okay.
Oh, so good.
C's candies, just go for
Not
it.
a fan.
Okay?
Not a fan of sodas though. Not a fan of Coke because it's bad for your body and your health.
Hey,
But
dude, they own water, bro. You can drink water, dude, and Gatorade. I think.
I am drinking a Coke right now. I gotta say.
How dare you? Shame.
But hey, Bob,
Coke Zero.
Coke Zero. There you go. This will blow your guys' minds. I got to say, blow your mind at least once in every show. Monkey Pants made his first millions off real estate. His first million was off real estate in LA. He was a real estate developer in Los Angeles.
How about this fact for everybody out there is that the most millionaires and billionaires in history have been made off of real estate. So how about that one? Right.
Well, there you go, King Henry.
Yeah. Hear ye.
Bob and his feudal serfs. Got it, Bob. Thanks. Anyway,
hey, don't be mad because I ride in on a white tiger to wherever I go. Okay.
Oh yeah, you do. Anyway, hey, check out the biography, guys. I'm being serious. It's like it blows your mind because you see these guys and they're just like kind of like really old rich dudes, and they're just kind of like I'm so rich. Like,
Crypto's rat poison.
Yeah, exactly.
Right.
But you know what? There's a life story there that I think we should respect. That's my only point. I don't agree with him on Bitcoin. Okay, I got it. But I mean, it is what it is. But there's a real life story there, and and the guys. I mean, and in addition to that, like I think we should pay attention to billionaires and millionaires, and I mean that's what a lot of what we're trying. That's a lot of what we do at Money Vikings is we're basically taking all the habits and all the things that billionaires and millionaires are doing, and we're condensing them into a show and into a blog. We're just this is what the wealthy do.
That's what makes us unique.
Yeah.
Right?
Yeah. You're unique, Bob. And handsome.
Where are we going?
I don't know. It's a wild show today, but that's okay. We're having fun.
We are.
Hey, Jerry, this is the last news item. This is totally up your alley. Because I know you're
Greg.
Big. Yes. Yes, Jerry. Okay, Jerry, check this out. I read an article, man. The power of walking. You are so good about your walking.
I try.
You are so good. So it is the most underrated form of exercise because we don't talk just about investing on our blog. We have a whole health section where we bring together all the things we're reading about health. So it's a simple form of movement that has a wealth of wide-ranging benefits. Just go for a walk. Great way to connect with our bodies, nature, and de-stress. So anyway, I read this article that was really fascinating, all about the power of just going on a walk.
Nice. That's my favorite form of exercise. I try to do it daily.
Well, apparently you are a wise man. You're onto something. So
I'm onto something.
You're onto something. You are. Okay, guys. Let's get into it. Here's our main topic. You ready?
Ready. Bring it.
Okay, bring it. Okay, talking about Monkey Pants, I read another old school dude, Charles Ellis. Okay, another billionaire. Okay, another old school billionaire. He was handsome like Monkey Pants back in the 60s and 70s. But we all get older, okay? That's the way it goes. Anyway, he wrote a classic called Winning the Loser's Game: Timeless Strategies for Successful Investing. So he's kind of like a Papa Bee in a Monkey Pants, read the book. But and so for people, a lot of times on our show and in our blog, what we're doing is we're reading the books so that we can just save everybody time. We're going to just distill these things down to the basic facts, so that you just get the gist of it and you can move on and apply the points. But the main point is this. It's that basically as investors, what he's trying to say is that almost all of us need to consider ourselves amateurs. Okay. Right. At least 95% of us. We're not investing as our day-to-day job, billions of dollars for clients. Okay. So we're not professional investors. We are personal investors. Okay. And so what he's basically saying is, they really don't know if picking stocks can lead to long-term beating the market. And really a lot of the research and the studies on this say that a lot of it is probably up to chance and luck and timing. Now, it doesn't mean that we don't do some of it. I enjoy it personally, and I think you guys do. With 5 to 10% of assets, I like to pick things, I like to pick things for a variety of reasons. I like the excitement of it. I like to make the money. But I really think that at the end of the day, this book is trying to say you've got to have a portion of your portfolio that is capturing the market. Okay, it's your classic S&P 500, boring. He's basically saying plain old investing, and these money managers could get bored, right? But what does the title mean? Winning a loser's game. So what he's saying as an analogy is that when people are playing tennis, like, unless you're Bob, you're not a professional tennis player. Okay.
I am. What are you talking about?
Oh yeah, no? You are. You're a professional tennis player. But
I wear my skirt and everything. We're good.
Yeah, most of us are not professional tennis players. So if Jerry and I were going to go out into the court and like play tennis with each other and not have a heart attack, well, Jerry walks a lot, so he'd be fine. But basically, the point is this: when Jerry and I are playing each other, we're actually in a way trying to beat ourselves, because when you're an amateur tennis player, just like an amateur investor, what you're trying to do is make as few mistakes as you can make. And basically what ends up happening is it's not the person that has the greatest skill that wins. It's the amateur that makes the fewest mistakes. So that's why they're saying, like, that's why it has that little plucky like name, like winning the loser's game.
Yeah.
So basically, it's not necessarily about beating the other guy. It's about making the fewest possible mistakes, and you'll probably come out on top.
We talk about this with the stock market stuff, right? It's when a long time ago it mentioned that it's not always about maximizing the gains. It's about minimizing the losses as well. Like that's the reality of it, is that good investors aren't always about always constantly making good calls. It's also minimizing the losses of those bad calls that they make. And that's going to lead people to be profitable and make money and grow out of this. So absolutely.
Yeah, I don't know if it's directly transferable or not, but when I do strangles or iron condors or sell calls, I'm trying to do that. And I expect whatever percentage, 16% of them, 20% of them to fail. I know that. But I know that going into the game. So, I'm trying to structure the trades so the 80 or 75% that I do win, make enough to cover those losses.
Yeah.
Well, that's what I love about your trades, Jerry. And that's what people are going to get on Money Vikings Premium, is that your trades are based on probabilities, right? And it's based seriously on a probability and a risk and a direction call. And so you've really controlled the parameters, and somewhat any rational person can make a decision and say to themselves, okay, I have a 75% chance of winning $20, right? Or gaining $200, and I have a 25% chance of losing it all. And then people can kind of wrap their brain around that, and they can say, okay, would I roll the dice on that? I would, I would.
Better than a 10% on AMC or something like that. Right? So here's a quote from the book. It says,
so it went a lot into like Bogle was kind of talked about too. We love Bogle, Vanguard, right? I'm a classic Vanguard guy. But as a champion of index investing, Vanguard gave investors a new weapon in the loser's game. Index funds match the performance of the market, and with time, the cost advantage translates into a powerful performance advantage. So they talked about back in the day, the ultra wealthy had a lot of helpers on Wall Street that charged high commissions. Okay. But when you had index funds with such low fees, all of a sudden the medium kind of like, small guy or the small investor was actually winning. He was coming out on top. He was making fewer mistakes. He or she was making fewer mistakes, and their costs were lower.
Can I say what it is? I love this expression. No, I hate it. It's democratizing investing for everybody. I hear that all the time.
Democratizing investing. Wow.
Democratization of currency.
Yes. So that's kind of saying that at one time, I guess, investing was kind of the arena of the elites. Is that the idea? I mean, okay. Well, that
looked
makes
at it.
sense.
The wealthy and the
Highly
the
skilled money managers, top of their class, best education. They have access to all the computers and algorithms and data from stores, whatever, just pouring in. So they should theoretically be able to make the best investment decisions.
Well, there you go. Yeah.
Which is there is an irony there, because I think there is this misunderstanding out there that having an education doesn't make you educated, and we are seeing this wave nowadays of people who do not have this investing
Like a pedigree.
Yeah, right. But there's ones out there nowadays that didn't go to school for all this.
I went to the Wharton Harvard School of Investing.
The Wharton, yeah, I'm certified. But it's like, nowadays it's like we don't go there, and but as long as you can recognize things, and maybe you have a talent or just an inherent skill or ability to recognize patterns and things, and you can bring that to the table and outperform somebody who went and got some plaque up on their wall with some degree,
Yeah. We're seeing it. It's and under what Jerry's saying, it's massively democratized now. Now we're holding a smartphone and we can do all of this. Now it's a little bit scary too. And then you do want people to have basic understanding and education. And then you want people to have control. That's what they talk about. Mungie Pants is big about this, like control of your emotions, managing your emotions I think Warren Buffett talks about this all the time. Like managing your emotions is like bigger than knowing anything about investing. Just like not freaking out when things are dropping and not selling at the wrong time. And so that's what they mean by the loser's game. That, if you are selling at the wrong times and freaking out because your emotions are running rampant, that's you're losing the loser's game, right?
Jerry, what's your favorite quote?
I was always sitting on my hands. Something like that.
It's the sitting that made the difference.
It's the sitting. It's always in my sitting. Yeah.
It's the sitting. Yeah, I've seen it. If you've made, I'm trying to do better about this too, guys. I'm trying to have longer time horizon. I'll give you a recent example. Cielo Waste Solutions. Okay, we talk about it a lot. I'm totally into it. I'm all behind, I'm all into the DD that Penny Queen has done and that Brian's done and the group is talking about. I'm all about it. It's also risky. I don't know where this thing's going to go, but I'm trying to just, I set my investment. I put in an amount that I was comfortable with, and I'm trying to just sit there. I'm trying to just say, okay, this is something that seems like it's going to work out long term. They're going to get this thing desulfurized, and they're going to start production, and that should be a catalyst. Yeah. But at the same time, I have to admit that I'm not the CEO. I don't know. I'm not Don Allen. I don't know what. Maybe he's seeing some bad news right now that hasn't hit yet, and I don't know. I'm just an investor.
Right. Right.
We have to be realistic. So.
Yeah, but but also, with that, Greg, is that you have to project out too and look at like the future of our world and where things are going and what we're doing, and when we have opportunities like this, when somebody has brought to light a company that really is revolutionizing something, like Tesla, right? Electric vehicles. He was his name was drug all over the town, and look where he is now. Like he's revolutionized. Maybe this is the same thing with Cielo. They're doing something that is going to just be drug all over the town and is going to look bad. Eventually, one of these days, well, he's going to,
Amazon lost money for how many decades?
Right. Yeah.
I don't know. One of the greatest stocks ever.
Yeah.
So
Cielo has that potential, and it's massive. It's massive as soon as they start expanding out.
To add to what you're saying too, Bob. I read a quote the other day that said something like, if you never want to lose and you never want to be criticized, or you never want to take the slings and arrows of life, don't do anything. Just sit around. Don't do anything.
But even then, you still get criticized because you're not doing anything.
You might. But
catch 22.
Yeah. So anyway. I don't know. So here's another thing from the book that I really like, because I'm a big believer in this. But, they said, and it's true, the statistics show that we really don't know if a portfolio manager's results are due to skill or luck. And they basically say it would take too many years of measurements. A person would retire before you would have enough data and time horizon to really understand if the performance that the manager was getting was because of some crazy skill they had, or basically it was partly luck. So I think we need to admit that it's some combination of both. And we just need to be cautious with money managers. We're all money managers in a way now. Okay. And so like, I try to do this, guys, like last year, I had a killer year, right? Like I did really well with the investments. Okay. But I had to take a step back and ask myself, well, was a lot of it that I was piggybacking off of just the great like rise out of the COVID thing. I freak out. I continued to invest. And so I had great returns, but should I sit back and say like I'm some genius? Maybe for marketing reasons, I should say I'm some genius. But but you guys get the idea, right? It's like we should be. I think humility is important, right?
Yeah.
Yes.
Yeah.
I think, and I also think one of the most important parts of investing is managing risk.
Yeah.
Being able to take those losses and move on and try again. Right.
So it's what a good investor is being a great manager of risk.
Yes.
Yeah.
Yes.
And that's what it is. So here I'm gonna hit you with some quotes. Here's some things to think about.
Please.
So
hit me.
So Sequoia Capital, right? Sequoia. The founder of is Michael Moritz, and this is something I want to bring up because it's actually kind of opposite of how our late and great grandpa thought about this. He been very successful for a very long time now, and he was actually asked once about dealing with the company's success, like how they were doing, and his response was, I think we've always been afraid of going out of business and having that fear. So that fear was the drive to continue forward. Where, talking about great grandpa Hank, he did extremely well in the real estate world and investing world. And, he would go out there. He was a private lender for when they first came on board about in San Diego. And
he also took his bumps and scrapes.
He did, but the thing was, we asked him before, it was like, Grandpa, like, were you ever afraid of losing it all? And his response was, I never thought I was going to lose. He didn't have that mindset, and so it's a very different type of mentality that can essentially get you maybe the same results. It just depends on the temperament of the person, right? And what they're doing. The other thing is, we talk about Papa Buffett. Risk comes from not knowing what you're doing. Rule number 1 is never lose money. Rule number 2 is never forget rule number 1.
Right.
I
love that one. No,
it's
I love
not
that
necessary to do extraordinary things to get extraordinary results. Right?
Yeah.
So these
compounding time.
Yeah. So these are the things, is that there are very wise words from people in life, and I think you need to take them for what they are and really think about them. And we need to ourselves calm down, take a breath, right? It's right.
I needed that today.
Right. And so, but the thing is, like, it's to kind of to backtrack a little bit. We talk about the social media, the Wall Street bets and stuff like that. Is like, you guys, everybody listening out there, you see these things put up on social media, and we've mentioned this before about just social media in general. It's to entice people for envy and jealousy.
Well, it's everything, right? It's everything. It's in a way, Bob, right? It's a groundbreaking tool. Okay, we're all connecting on different levels with people we never thought we'd connect with, which is awesome. But it also has like every technology, right? Most technologies have a dark side, right?
Agreed.
You know what I mean? Yeah. You know what I mean? Bob, you're wise beyond your years. That's all I can say.
We may have lost Bob.
We lost Bob.
Hopefully he can get back in and we can wrap up the show.
Yeah, Bob will patch back in. Okay, Jerry, here's the other thing. So I think you'll like this one. It's from the book as well. Your investments do not know your wishes or intentions, and they really don't care. So I thought this one struck me, because the idea being, because I think we need to think about this. We've talked about this a lot over the years with our blog in terms of FIRE, right? Like financial independence, retire early.
Yep.
We're not so much into the retire early part, but we love the FI part. But the idea is being, know where you're trying to go. Are you trying to make a situation where, you can kind of be in this position of take this job and shove it? Are you trying to, oh, Bob, you're back. Thank you.
Sorry, did I get cut out?
Yeah, I said a lot of really nice things about you, and I'm sorry you missed them. But anyway, here's another one, Bob, that we shared. Your investments do not know your wishes or intentions, and they really don't care. Okay. Yeah. So the point being, I was saying to Jerry, is that this kind of goes back to our days where we're talking a lot about FIRE, financial independence, retire early. And I was telling Jerry, reminding him, we never really into the retire early part, but we really like the financial independence part, because I like to do things. I like to do things. I like to make things. I like to do stuff. I don't want to sit around and just do nothing, unless want to. But anyway, the point being is, your investments you have to think of as a tool, I think, is how I think of this. Like, it's a tool to build the life that you aspire to, but that's different for every person. Not every, I'll speak for myself. I don't need a golden toilet. Do I want a nice toilet? Do I want some plumbing that works? Yes, I do. But I do not. But it sounds crazy, guys, but I'm being serious, right? Like, some people, that's what they want. Okay, they want, like, I want a gold toilet, and I want a throne, and I want a 25,000 square foot home. I don't want that. I'd like a home, nice home in the suburbs, paid off. Time with my family, time with my friends, time with you guys, have friends and family over, go on a couple of trips each year. That's my goal. I don't need the private jet. I don't need a yacht. It's fun stuff. I get it. Jeff Bezos building a yacht for his yacht, but honestly, I don't need that. I don't need to throw a ping pong ball in space to somebody. I just don't need to do it.
Yeah. No, it's really important that people understand, like, what their needs are for, happiness and things to keep them busy during retirement. I don't even like the word retirement per se. It sounds like you're doing nothing, but really it's an opportunity to not have that 9-to-5 commitment and kind of do something else that you want to do, that you're interested in, pursue other endeavors, hopefully ones that provide you with stable passive income sources.
I think you're onto something with that, with the retirement thing. I think that's being, redefined. So anyway, I think that's kind of a wrap up of that book. Hey, Jerry, what are you thinking of doing next week for trade strategies? What do you got cooking?
Yeah, so next week there's a lot of earnings again going on. So I'm looking at Coinbase, Neo, eBay, Baidu, Disney, and AMC. Those are ones that I'm currently not. I do have a position in Coinbase, a long one right now, but I'm looking at maybe some earnings trades on there. And then for the positions that I am in, I'm just going to continue to watch and manage them. I've actually had fun with stablecoin. I may have mentioned it before, USDC and crypto.com. That's paying me 6%. So
God, that's amazing.
I'm really happy. No FDIC insurance, but you don't get that either from buying Bitcoin or I don't know. Do you get FDIC insurance from buying a stock? I don't know.
I don't know. I'm finding it very hard to find that kind of yield. There's a couple of what I call higher risk REITs out there that I do that have a pretty high yield that's up in that 6 to 7 to 8% place, but that's a high yield. So that's great. You're definitely getting ahead on your money.
Yeah. So I'm experimenting with that, and then I'm keeping an eye on Mavis, MVIS. I may have accidentally sold a call a little bit too low, $17. So I'm kind of hoping it doesn't rally this week, but it may just do that. We'll see. I've got some Roblox and Baba earnings trades that I did last week that I'm looking to close out once they hit 50%. Managing a Las Vegas Sands, and then also SoFi has earnings next week as well, and I've got a long position there.
Great stuff, man. Hey, Bob, give us a little on our way out. Give us a quick update on Money Vikings Premium.
Yeah. So I Jerry and I have been burning the midnight oil like mad scientists. Jerry's handling a lot of the technical stuff right now, which is great.
I'm doing nothing. Yeah, I'm just like
Greg's just getting bronzy. Greg's sitting bronzy.
Yeah, just hanging out in a hammock, working out and drinking beer.
Yeah, that's it.
Keeping the podcast running, man.
There you go.
Yeah.
Writing articles.
I'm trying, guys. I'm doing trying.
Yeah. You're doing great. No, but it's really it's exciting, because what people don't realize is that we talk about the premium site, and they go to our site right now, moneyvikings.com, and you're not going to see it. People don't realize is that we actually have a separate thing off the grid right now that we're actually building that will one day just pop up And so it's the final details that we're putting together and the last little things. But I will tell you, there's an immensely there's a lot more content that's coming people's way.
I would call it a treasure trove.
A treasure
of wealth,
trove
of ideas and inspiration to build wealth, right?
God,
A
so
treasure
good. I
trove of
feel like
ideas
I've heard
and
that
inspiration.
somewhere.
I think so. No,
Yes.
I am so excited about
I
Money
am
Vikings
too.
Premium.
I really am
So, guys, when it comes out, you'll be the first to know. We're gonna announce it soon, and hope you all sign up.
I want to make sure people know is that we're not going to talk about pricing right now, but I will let everybody know, especially our listeners, that for launch we will be giving a nice hefty discount to people for signing up that they are locked in on. Doesn't change. That's where they're at. And then they have a period of time to do it, and then from there it's going to be at its regular price.
And this is basically going to be, I would call this this is going to be like X-ray vision into all of our investing moves.
Absolutely.
So I mean, we've been relatively successful, I think, all three of us. So I think it's worth it. You're going to get X-ray vision, right? You're going to get X-ray vision into all of our investing moves and analysis, and this is what we're doing here, is what we're doing there, and it's everything from equities to real estate to bonds to health hacks,
credit cards,
corn.
Yeah, corn. Don't forget corn.
Is corn.
Yeah, don't forget corn. Corn is key.
But that's the thing, is like
I'm really excited about it because it's a great community that we're kind of part of with this ecosystem, with like Brian at Gator Traders and the Penny Queen and everybody, and our chinchilla friends that we're going to try to beat the hell out of. So we'll see how that goes.
No, absolutely, man. And that's the thing, is I really can't say it enough. I think people don't realize what they're going to have access to, the information and kind of how easy we're making it. And it's going to be great. I'm excited. I can't wait.
Yeah, good stuff, guys. Hey, any final words, guys?
Have a great week, everyone.
I think my thing is just hedge safely in these uncharted waters as the market gets a little uneasy. Just make sure you guys are, people are keeping an eye on everything and not just carelessly walking away.
Yeah, there you go. I like that. Manage risk.
Yep.
Yeah. Hey, you guys have a great one, and we'll see you all next week.
Cheers.
Take care. Bye.